Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday on a day when we have seen some very positive momentum coming through on the market. Let's have a look at where we are finishing the day's session on a day where, at least on the ASX 200, we have got very close to records. CBA shares once again hitting a record high. No stopping this stock, which is going to report next week, $162.43 at one point, and the ASX as a whole notching a 1% gain as this immediate threat of a US triggered trade war has subsided somewhat. Investors very much focused instead on President Trump's pivot to his vision for the Middle East. But of course, that has impacted quite heavily what we've been seeing in global oil prices. So let's have a look at some of the thematics of the day in terms of the fact that we are trying to get towards these records, a record in sight, as I mentioned. Also some earnings upside, early days in terms of reporting season, but News Corp looked pretty good. At one point, its shares hitting a record. We also had REA Group coming out with numbers today. So some of the numbers that are coming through very much looking quite good. We've also had some positive broker upgrades today. Wesfarmers, UBS upgraded the stock to neutral, and also Morgan Stanley upping its price target for Computershare. On the other earnings front though, Beach Energy narrowed its full year guidance, so that saw its share price fall, and Magellan also reported some flat retail and institutional flows. Looking at the energy picture though, certainly a slump there in terms of the energy space. Global oil prices down by 2%, also on the fact that you've got this large build in crude and gas stockpiles in the US. Let's have a quick look at some of the sectors. Retail stocks looking really good today. I mentioned that upgrade for Wesfarmers. You've got JB Hi-Fi, which is reporting on Monday though lower by 0.5%. Having a look at the banks today, leading with CBA, which again hit a record, closing high by 2.5%. 162.25. ANZ also just under $31. And NAB, look, a lot of traders, Gemma Dow was telling us this yesterday, really been trying to wait to see NAB hit that $40 level. So $40.37, up by almost 3% today. But some of the weakness, as we mentioned, in the energy space today, led by Santos and Beach Energy, down 5%. Of course, investors very much disappointed with its guidance. Just having a look at some of the other news. News Corp posting this 5% increase in second quarter revenue to $2.24 billion. Shares up 5.3%. REA, of course, is its spin-off, and it was one of its best performing sectors or businesses. But the CEO of REA, Owen Wilson, to retire after 6 years as CEO and 10 years at the business. Shares though up as it reported a 20% rise in first half revenue to $873 million. Beach Energy, we mentioned, falling today despite an increase in profit after narrowing its guidance range for the full year to 18.5 to 20.5 million barrels of oil without explaining the change. And Findi and the small caps locking in a new contract with Union Bank of India, which it says will boost its revenue by $75 to $80 million over the next 8 years. The stock of the day, though, was REA Group, and Nadine was joined by Howard Coleman from Team Invest and Grady Wolf from Bell Direct.
Was a bit of a drop, but not the size of a drop that would have our Team Invest members jumping for joy and say, what a bargain. But yes, considering, any company that reports a 26% increase in profits and hasn't issued any other shares, so therefore it's a 26% increase in earnings per share, you'd expect the market to say, wow, well done, fantastic.
It is the leader in the market. We know Domain's just behind it. But looking at the results, double digits is what I wasn't expecting this reporting season, as I mentioned earlier. But having a look at the results, if you've got revenue up 20% in a time where a lot of people are saying they're not selling their houses because of the high interest rate environment, people can't afford it, it's a buyer's market at the moment, all this stuff, then the fact that they're still growing is incredible. So we have seen strong results in Sydney and Melbourne. There was growth in India, albeit not making money just yet, as Howard alluded to, but there was significant growth there. So as they're growing towards turning that around, it's a very positive sign. I think the CEO standing down, any CEO standing down after...
Always a little uncertainty.
It always kind of gives the investors a bit of a, oh, what's going to happen? But I think with this company, they're in very safe hands. So we do like the company, buy rating at the moment.
All right, that was the stock of the day. For his take on all things markets, let's welcome to the COB, Fraser McLeod from Shaw & Partners. Good to see you as always, Fraser. Your take on, I guess, what we've seen so far since Trump came through with his tariff threats, but then, of course, it does look like the art of the deal, he's ready to negotiate as well.
Yeah, look, I think you've cracked it there by saying the art of the deal. He's a guy that wants to make a deal, hopefully, with everyone. Last week was an amazing week in market. It really was one of these roller coaster weeks whereby we ended up there was in the US market there was $20 billion of trade inflows. People bought back stocks really strongly, but it was also a week just a week last Monday that Nvidia lost $600 billion and was the greatest stock market loss of the day ever on record for any one individual stock. So you got to think in that Trump, hopefully, in the pursuit of no more wars, that Trump will try to do a deal with everyone. His focus is on the large trade deficit. Fortunately, we don't here in Australia have a large trade deficit with the US, so we're not in the crosshairs. Yes, hopefully if the market continues to think that Trump's tariffs will be watered down, then everyone will hold on to their stocks. If this turns into a true and an absolute trade war, then that's not good for anyone.
Indeed. All right, let's drill into our market and some moves here. I mean, everybody's saying sell the banks, Fraser. CBA is not listening, or people buying it are not listening. Another record today.
Look, I must confess, I've been a seller of CBA for quite a while, and have I been right? No, I've been wrong because the stock keeps going up. It's a very strong day again today for CBA. So when we talk to clients about CBA or really Aussie banks as a whole, you have to recognise it's almost un-Australian to be selling Aussie banks. So you have to sort of get through that one. It's okay it's a share like any other, and it's okay to be selling an expensive investment. So Aussie banks undoubtedly have been great investments over the past 20 years. That may not always be the case, however. So there's been, especially over the past few years, there's been an absolute explosion in house lending. That won't continue. Most banks are now really struggling and have struggled to grow their earnings over the past few years, despite the fact that we've had a very kind market to them from a lending point of view. Many people are now struggling to service their mortgages. We're probably going to go through a period of deleveraging rather than taking on board more household leverage. And the banks are already paying out 3/4 of their earnings in dividends. So the ability for the dividends to go up with also coupled with a very high PE fundamentally gives you a few alarm signals that you should be selling. Most people should be selling, however, because the percentages that they are now holding within a more of a balanced portfolio is not in balance. They're just holding too much in the way of Australian bank stock. And so whilst the call is to sell, if the effective outcome on that is that you'd be reducing holdings in favor of a more diversified approach to portfolio, which is just sensible. So the one point of caution that we also like to leave with investors is that if you do pick banks over the long term and you're picking on very, very high PEs, then you tend to find that the next few years are pretty poor investments for those banks. So yes, not a fan. Somebody's out there buying them, but it's not us.
You are a fan of uranium, though, have been for a long time. What are you thinking in the space, given the deep-seek shock, which feels like ages ago now?
It does seem like, I know it's only been a couple of weeks, hasn't it? So we're into February. What perhaps a little bit unfairly, but we did see quite the targeting of some of these uranium stocks, like Paladin on our market, heavily down. Quite a shorted stock, heavily shorted stock as well, as was Boss Energy. The shorts don't seem to be working out because the fundamental news still remains very positive. However, they were targeted from the point of view that there seemed to be a relationship between well, if DeepSeek's come out, then less chips would be needed, so there'll be no need for so much in the way of data center power. So that translation through to electricity demand would be less globally, and so suddenly let's sell the uranium place, which were meant to be the great solution. All of that seems really total nonsense. The need for electricity is going up. The need for decarbonized power is going up. The Chinese are building many nuclear power stations, and everyone else around the world is wising up to the fact that we need more uranium. There is a shortage of supply coming, and it's already happening really, and we don't have the supply coming online. So demand is constantly growing, and supply is very uncertain. So yes, we remain pretty bullish there, and share prices are quite a bit cheaper than they were at the peak of May last year.
All right. One stock in particular that you're looking at is Chrysos Corporation, ASX ticker code C79. I have to say I don't know much about this stock. A disappointing last year. Why would you stay the course here?
Oh, yeah. So this is a local business to us here in Adelaide, probably best of their kind. So they do photoassay work in mining technology. Effectively, they can analyze gold samples, copper samples, and some other minerals as well, much more efficiently, much cleaner, with a lot more accuracy than anyone else around the world. It truly is a fabulous game changer in terms of the technology that they are using. Last year, perhaps the capex was a little bit much. The share price had a tremendous run up in 2023. 2024 not so kind. It is starting to pick up again now. We value them, the enterprise value. They probably should turn profitable next year, but the enterprise value against revenue is probably about 11 times. We value them on, say, 15 times. Certainly, contract momentum is picking up. They've come to market and reiterated that their targets are on track. So we've got a lot of comfort there. The stock's trading at $5, and in our eyes would easily be worth $7.
And Telix, a quick word on that as well, Fraser, one that you're looking at still.
Also a great growth stock, probably our best pick within the healthcare space, and one of the most popular stocks at the moment. A huge momentum behind the stock. It almost ticks every box if depending on which style of an investor that you are. But so Telix is developing cancer treatments, and very promising cancer treatments for kidney and prostate cancer. The catalyst on those would be regulatory approvals, which are now coming through. There is a lot more a growing interest for targeted precision medicine. Very experienced management. The management come across with they're delivering everything that they say they wish to do. They are delivering, and then more so. And as I say, very positive momentum. It is one of these stocks at the moment that if you're looking for a way to just protect yourself from the Trump dangers and the volatility, Telix is a nice way to play that in that regardless of what Trump does, Telix will probably still continue to head in the right direction. So the stock's just trading a little bit below $30 a share, and we value it $5 higher. But constant upgrades from analysts on Telix. It's one that could be the darling of 2025.
Oh, okay, big call, Fraser. Thank you as always, Fraser McLeod there from Shaw and Partners. Telix could be the darling. Thank you. All right, let's have a quick look at some of the leaders on an up day. News Corp, we mentioned after its second quarter numbers, up by more than 5%, hitting a record at 1.5597. Westgold also looking good, along with Wesfarmers. Remember, it had that broker upgrade from UBS. To the downside in the large cap stocks, or some of the other stocks that are moving today, Beach Energy was down 5% to $1.45, and Zip was down 4.4%. Let's have a look at some of the other movers. Or indeed, let's have a look at there we go, the small caps. Pact was a front runner, up by almost 19%. Kelly Partners came through with earnings a couple of days ago. Today shares were up by 8%. To the downside, we had weakness in some of these small players. Petrotherm was down 24%, and AI Media Technologies down 8% to 62 cents. Tonight on Wall Street, I think we've got Amazon earnings. We've also got US non-farm productivity and US jobless claims. while the Bank of England comes through with its rate decision. And locally tomorrow, it is a Friday, not a lot coming through. We've got Nick Scali's Satire, also Charter Hall REIT, I think, is CLW coming through with its earnings. And in Japan, some household spending data. But a positive session on the local market. Let's see where the CBO 200 is, up by 1.1%. The ASX 200 getting close to a record today, closing higher by 103 points or 1.2% to 8,520. News Corp and Westcold, as we mentioned. The front runners, there was weakness though in the energy space, and that was pretty much the only sector, in fact the only sector that closed lower, down 0.4%. As of course we see the focus from Trump turn to the Middle East, also global oil prices being impacted by the fact that there was a large build-up in US crude and gas stockpiles. Financial stocks up 2%, CBA again hitting a record intraday. Consumer discretionary, REITs, materials, industrials, all having a positive session. That does it for the COB this Thursday. We'll be back live from 9:45 a.m. Eastern. Join us then.